So Bitcoin had a V-shaped recovery after all. Bitcoin jumped from 82K end of March to 94K end of April. And now, as we speak, it's at 104K. So this V-shaped recovery is a bull market sign. And okay, we're still far off from the stock to flow 500K average for the 2024-2028 halving cycle. It's an average, right? We're still far away from that. But we're only 1 year in. Only 1 year into the cycle and 3 years to go. Fundamentals are very good. Bitcoin is 2 times as scarce as gold, but gold is 10 times more worth than Bitcoin. So Bitcoin remains super undervalued, in my opinion.
It's not every day you hear one of the most trusted Bitcoin analysts on the planet say that Bitcoin is undervalued at over $100,000. Yet, according to Plan B, that's exactly where things stand. In this latest forecast, he's doubling down on bullish expectations, arguing that the bull market is just getting started. From metrics like the RSI to on-chain analytics and moving averages, Plan B lays out the technical reasons why a price explosion may not just be coming. It may already be underway.
So many called the bear market when Bitcoin was 82K the end of March. But I remained bullish. Why is that? Mainly because of this chart, the market cycle chart. And I made it in 2022 after Bitcoin missed the 100K in 2021, and I was late recognizing the bear market in 2022. So this market cycle model is an on-chain model. It's based on analysis of all the on-chain transactions of Bitcoin. And there was no yellow, no distribution phase, end of the bull market phase and going to the bear market phase. There was no yellow in March. There was red, bull. So I knew that although it's a very weird, long, flat bull market, that the bull would continue.
Even when others were calling for a downturn, Plan B stood firm. He trusted the signals he built into his own models, data drawn from every transaction on the Bitcoin network, and saw none of the usual signs of a market top. The absence of distribution indicators was, in his view, not just encouraging, but a confirmation that the momentum hadn't yet peaked. For him, the flat price action was just the calm before the next surge.
Now, if we look at RSI, the relative strength index, currently it's at 66, and that's around the average RSI level of 65, the dark area here, the black area. And it has been around that average for more than a year now. In my opinion, how I read this chart is that Bitcoin spent a couple of years below that average of 65, and from now on it will stay 1 or more years above the 65 average. In fact, I think we will see 80 plus RSI months again, at least 4 of them, just like in the bull markets in 2021, in 2017, and in 2013. So I think we'll see those high RSI numbers again, at least 4 times. And those high RSI numbers are associated, of course, with high monthly returns of over 40% per month. So
when RSI levels break above 80, history shows it's not just a blip, it's the sign of something bigger. Plan B connects these technical indicators with the explosive phases of Bitcoin's past bull runs. According to his outlook, we're not just in a good month, we could be heading into 4 or more back-to-back breakout months. That, by his math, is what could take Bitcoin to previously unthinkable levels, and fast.
So if we have from the current level of, well, on average 100K, 4 months of 40%, that would bring us already in the 400K area, which is not inconsistent with the stock-to-flow model.
The stock-to-flow model has long been the backbone of Plan B's predictions, and it's still the metric he believes holds weight in this post-halving environment. While many dismissed it during Bitcoin's quieter months, he now points out that if even a few more of those 80 RSI months play out, the leap to $400,000 isn't speculative, it's mathematical. And in that scenario, the stock-to-flow's $500,000 target doesn't sound so crazy after all.
Moving average, this is black line, it's up from 46K end of March to 47K end of April. And note the difference between the 200-week moving average and the geometrical average, that's the gray line, is increasing. And that indicates a developing bull market. FOMO is building. You can see it, and you can see it in previous bear markets too. If the 200-week moving average and the geometric average have been close together and then diverge again, that's a bull market. Here too in 2017, same in 2013.
The technical indicators are not just favorable, they are aligning in a manner reminiscent of previous major bull cycles. One of the most evident signs of renewed buyer enthusiasm is the increasing gap between key moving averages. This widening distance signals that investor interest is growing. According to Plan B, we are entering a phase where the fear of missing out, FOMO, begins to simmer just beneath the surface. Once this emotional driver takes hold, historical trends suggest that the price charts can experience a sharp upward shift very quickly, leading to a significant surge in value. The technical indicators are not only favorable, they are aligning in the same way they did during every major bull cycle in the past. One of the clearest signs of renewed buyer enthusiasm is the widening gap between key moving averages. According to Plan B, this is when the fear of missing out starts to simmer beneath the surface. Once that emotional driver takes effect, historical trends indicate that price charts can rise rapidly.
So the last phase of the bull market, the FOMO phase, is about to happen, and we might see a very nice 2025 after all.
From start to finish, Plan B laid out a compelling case that Bitcoin's recent surge is more than just a bounce. It's the early stage of a powerful bull market. We began with the dramatic V-shaped recovery that took Bitcoin from $82,000 in March to over $104,000 by early May, a pattern he identifies as a classic marker of strength. He backed this up with on-chain data, specifically his market cycle chart, which showed no distribution phase typically seen before a downturn. Instead, all signals remained firmly bullish. Then came his focus on the relative strength index, hovering at an average of 66 but expected to exceed 80 in multiple months ahead. Historically, these 80-plus RSI months have aligned with massive 40% monthly gains. Plan B argues that just 4 of these could catapult Bitcoin into the $400,000 range. He reinforced this prediction with technical indicators like the widening gap between the 200-week moving average and the geometric mean, another reliable sign of a growing bull phase. And as this divergence grows, so too does the market sentiment, shifting from caution to FOMO. Finally, Plan B stitched these indicators together to suggest we are now entering the final phase of the bull run. The same euphoric stage that fueled explosive growth in 2013, 2017, and 2021. His conclusion, based on both scarcity models and historical patterns, is clear. Bitcoin's explosive price movement isn't just coming, it may already be underway.
Now, then, that's not far away from the stock to flow 500,000 average, which can be seen as a target based on fundamentals, scarcity fundamentals. All right, as always, all models are wrong, some are useful. This is certainly not financial advice, and please do your own research.
With all of this in mind, on-chain strength, rising RSI, bullish moving averages, and the looming impact of FOMO, do you believe we're truly entering the most explosive phase of this cycle, or is there still reason to be cautious? Let us know your thoughts in the comments below.